Hello and welcome. I was waiting for Cody to
Yeah, welcome out. Sorry, I was going to take that, but I think it skipped right as we started going. I was like, wait, did I just lose internet? But welcome out, Halftime Crew. It is August 2nd, 2019. We have a full house, and you know what? This is a no justice episode right now. Yes, and I'll probably get in trouble for saying that, but whatever. We have myself, we have Marie, we have Slavic, and we have Coach Davidson here. Noah, I'll pass it over to you. How are you doing today?
Oh, I am fantastic. Just keeping an eye on this market. It's been interesting. A little bit of excitement this week. Between a little temper tantrum after the Feds and short, really good rally yesterday gave way to a Trump tweet, and here we are, a couple points down into that 2,900 level, kind of 2,940 ballpark, 2,930 ballpark, right at the 50-period moving average on the S&P futures. And I think at this point in time, the initial panic sell-off is slowing down, and we're into a lot of support zone down here in that 2,900 ballpark. So it'll be interesting. Yeah,
that green line, is that your 20 or is that your 50?
That's my 50. See, I know my moving averages.
Yeah, I don't like your colors.
Me either. I change them around just to mess with people's heads. So there you go. But no, that's a 50-period moving average. And yeah, we're sitting right at that. And again, just 2,900 ballparks, just, between 2,950 and 2,900, just a lot of congestion in general. So, big pullback, increase uptick in volume, a lot of concerns over the tariffs and trade talks, et cetera, et cetera. And as we were talking about in the Traders Lounge this morning, the new economic data, jobs reports, everything else came out as expected. So no new surprises. So, it's kind of an interesting scenario. The economy seems to be running on all cylinders, but they're trying to stave off those recessionary pressures. And I think that, the conversation we've been having this week about it, benefiting the dollar and benefiting us as far as GDP goes by weakening the dollar, in as far as the global currency trade goes, keeps the dollar slightly more competitive out there in international trade.
So let me ask you, and I want to ask everyone here, is that, are you seeing this as anything that's going to change your trading strategies, adjust anything? Are you seeing this as more Fed temper tantrum, as you were saying, or is this more of tariff man?
Well, okay. I always get concerned. I get a little tentative heading into September, October, because the markets are usually pretty flat and sideways through the summer months. They oscillate up and down. August, sometimes you see a sell-off, and then September is when the markets tend to go south. They always talk about markets crashing in October, but the fact of the matter is that's just when they realized it crashed. It started in September. So I always get a little tentative heading into the fall. And I usually start, my portfolio bias during the summer months is usually theta oriented. And I like to get really bullish for the fourth quarter when we get the right signals, but it's not unreasonable to expect a sell-off heading into fall.
So you mentioned theta. That's a perfect caveat for me to transition over to Marie, our theta queen. Marie, how are you playing this market right now?
I'm having lots of fun with short strangles on earnings.
Ooh, so not theta then. You've been doing some volatility plays then.
Well, yeah. But the theta decay is the shortest the last 7 days. So capturing that and volatility crush. And so, yeah, having lots of fun. But still higher condors and spreads.
So we were talking in the pre-production, and you and I were kind of having a conversation, and Slavic jumped in, and he said, there's an even easier way to not be affected by this. Slavic, what was that you said?
Well, go flat by the end of the day. Hello,
now explain that, because that is a different strategy. And of course, you are a day trader, so it's not something that the rest of us do, but you literally go completely flat with your portfolio every day.
Well, from different accounts, I do different things like that. Netflix, I was talking about the lounge. I closed that Netflix trade from the week ago, square yesterday before earnings, right at the target. So I do swing trade, but majority of my trading is day trading. So I killed Apple today because that's what I do in the morning. I trade Apple and BP, both shorts, very nice trades if you look at them intraday. And looking at markets, I was talking about Spider. When you look at 2018, the beginning of the year, there's that big pivot. And when you connect those pivots on the top, from 2018 to this day, you are at, let's call it channel resistance, right? So I was, again, on Monday, I was saying from shorter time perspective, we were compressing from month to month. Those swings were very small, and we finally gave. I know what's going on in the world as far as the news is going and stuff, but the technicals with the news combined, that's what you got. We got a little bit of selling right now, and so either way, I'm fine.
That's the time compression you're talking about, right? Where
that's correct.
The size here is getting shorter, and that's also got the same slowing momentum, like where it runs up big, then it runs up small. So you get the slowing momentum pattern. Yeah, when you get those two, time compression and price compression, that creates that rising wedge pattern. And I didn't draw that very well.
Rising wedges.
Time, yeah. Rising wedges and falling wedges are pretty strong reversal patterns. And I honestly did not. I saw those same things, but I expected the Fed rate cut to overpower it. And I wasn't. I suspected that the quarter point cut was priced in. I didn't think the half point cut was that likely. But I still think it's a rate cut. So at the end of the day, I'm not going to fight the Fed. I think the market's going to head back up.
I agree. I follow a bunch of traders on Twitter, and some of them went short markets before the announcement, and that was a bold move. But everybody was saying that it's the news is baked in. So yeah.
Well, and so the reason the market actually took a downturn on it was not the cut itself. It was the fact that Powell was refusing to state if he plans to continue cutting moving forward.
And he just didn't say the right things. Yeah, he sounded like a one-time cut, and they were
exactly. And we talked about this beforehand, that there was going to be two movements. There was going to be the initial movement with the cut, and then there was going to be the bigger movement with the actual speech that he gives afterwards, and then some Q&A. And in the Q&A, they were trying to press him to get the answers that they knew the market wanted, and he refused to give them. He was no, we cut this one time, and we're not looking at future cuts unless they're warranted. He was like, but we're not going to know if they're warranted until we get the data. Market wanted to hear, yeah, we're going to start cutting. It's going to be a cutting cycle, and we should see future cuts.
Well, and that's why I thought it was a temper tantrum, because it was like your parents telling you can't have your dessert first.
That's exactly what it was.
I want it. It was just temper tantrum. But then the recovery was really spectacular early morning yesterday. And then it was just, I posted a little tweet in our private chat message after watching the market rally up real strong to come right to that consistent. And all of a sudden sharply turned south. I'm like, oh, that's got to be a tweet. Well, hi, little man. I got a visitor apparently. So yeah, say hi to everybody.
Hi.
Tell them your
name.
Hey,
buddy.
Hi, my name's Jonah.
All right, Joni. Okay, you got to go back to play.
Y'all ever make it to Disneyland?
At least he's not naked this time. That could have been much worse. So
it reminds me of that BBC correspondent. Did you guys see that short video?
Yep.
When he was
That's why I have an open door policy. I literally keep my door open because he loves to crash in and see Daddy, and so it's always good. But that's one of the greatest benefits of all from trading is I get to be from home. I get to be I'm a stay-at-home dad. So not too shabby.
That is beautiful.
Yeah, that's the best part of trading is being able to work wherever.
I don't know.
Sometimes you just want to get rid of the kids.
We all do work from home. I'm the only one that works from home and then gets up and still goes to a 9 to 5. But yeah, you three, all three of you work from home, huh?
Yeah. That's the worst part about being on the road is I have to get dressed and put on makeup.
Yeah, you've heard me say it before. And you'll hear me say it again. Pants are for suckers.
I can prove it right now, but I won't.
As could I.
Keep the camera up here.
Yeah. Yep. Absolutely.
No, there are many days I'm still in my pajamas when we're shooting. I just put on a collared shirt.
Yep, there you go. So nice little pullback on NASDAQ, a little bit heavier selling pressure into the same 50-period moving average, same kind of support resistance neighborhood.
With the NASDAQ, we had two of their large components report this morning. ExxonMobil, take a look at that one, as well as Chevron, we'll get to next. And both of those earnings wasn't quite what they expected. And other than that, they kind of just pulled down. Chevron, I think, actually had better earnings than ExxonMobil, which is why you can see that it kind of gapped up, but then came back down intraday. And those two are one of the main reasons that the Dow is down along with the rest of the market, obviously. But
that drags the energy sector down. And, I kind of expect that in general from the energy sector this time of year. We've got interesting oil production going on right now, but typically
oil's up right now.
Oil, well, let's take a look at the crude. That's going to be dollar related though. So there you go. A little bit of consolidation in there back below all the moving averages, a little inside candle. But that's probably one of the sectors I find the weakest out there. I'm looking at a bunch of really strong sectors with good pullbacks. Again, look at the tech sector and new highs pull back into a big support zone. That's probably where I'm looking for my bullishness, not expecting some sort of miraculous recovery from oil. Let's look at the Dow/YM. Dow's down into the same thing, moving average. It's actually closing below its 50-period moving average, but it's into the same big support zone. And the rut, I don't know if you saw the rut, but I thought the rut was breaking out last week, and it did not. When you take a look at the rut, it's down.
No, the rut's doing a good job keeping all of our condors happy. That's what the rut's doing. The rut's like, you know what, tackle traders, I know that you have a lot of condors out there, so we're just going to go sideways for an entire year. The rut has been very helpful.
It has been very, very helpful. Now, I narrowed my condor up. When I thought it was breaking out before the Fed meeting, I rolled it up. And then when it ran back down, I rolled the top side down. So I'm in a more narrow condor than I normally would be. But it's still above resistance and below support, and that sideways movement. I'm not expecting anything more than sideways chop out of this. If it violates the 200, maybe some more selling, but that'll be a market-wide phenomenon. And again, one of the easier things that I actually kind of heard you saying is, Marie, this morning, is just talking about your ability to hedge and adjust, and your account's just fine, right? So same with you, Cody. You were talking about adjusting, and you'd had your VIX play on, and that takes care of a lot of the other problems you have. Any problems a downside move in the market can make. Having a good way to ensure that, whether you're using like VIX options or you're using like spider options or the futures themselves.
So I actually learned, and it's one of my core strategies, and I got it from you, is actually any long calls or long puts that I'll be doing regardless of the stock. If it starts moving in my direction, I'll spread majority of them out to leave it open-ended and become risk-free. And then something that I also have loved doing is then when we get pullbacks and things like this, I'll unwind that spread and take the profit off. And then when it goes back up again, well, now I can let it go back up, spread it up to where I can actually not only make it a risk-free trade, I can make it a locked-in profit regardless of what happens trade.
Oh, yeah.
So I just did that recently. Pull up McDonald's. McDonald's is one that as soon as we got that pullback 2 days ago before the market did it, I unwound it and completely opened up my calls on McDonald's because I had them spread out from when they had gapped up. And now that they're unwound and they're going up, my account's very happy right now between the VIX protection and unwinding some spreads. And that is just that adjustment of trades as the market moves. I don't care what the market does. I have a plan of how I'm going to adjust it out every single time.
Yep.
I am curious to try that strangle.
The adjustment on the naked put.
Yep.
Oh yeah.
Yeah.
So
I have a lot of naked puts. I can't wait to strangle.
Well, that just means that just sounds wrong.
That's strangle puts.
Some sort of creepy predator over here. Yes, I'm all on top of that. No, it's fun. If you're not a member, if you're not coming into the lounges, you're not a Tackle Pro member, you're not participating in our daily trading lounge, you're missing out, because that's where we talk a lot about strategy, repair, adjustment, and just practical application. You can get a lot of concept and theory a lot of places, but practical application is one of the things you're always looking for. So absolutely love to have you guys coming out to the lounges, and we hit McDonald's, we hit the NASDAQ, we hit the Dow. Let's check out the dollar. DXY. You still in that euro dollar trade, or are you out of that?
I am out of that, and I'm waiting for it to give me a nice, pretty doji down here as it had that breakout, and now we're starting to get that pullback. Give me a doji, and I will be a happy camper, and I will definitely be getting back in that one.
This is specifically what you're talking about down here is the breakdown.
Yes.
The retracement, you're looking for the doji in there, and then the continuation back down, right?
Yep. And I will be talking about that tomorrow on the Forex report, which I am doing again. And I'm going to do a little shameless pitch on myself right here. Guys, seriously, about 3 weeks ago, I put together an entire intro for beginner traders. If you've never done Forex trade, go check that one out, because I did a walkthrough on how simple and how easy it is to do Forex. It sounds like it's, hieroglyphs and confusing, but Forex trading really isn't. I would argue it's the simplest form of trading, because it's just buying, selling directionally, and that's it.
Super simple. I actually really like Forex because of the simplicity. First thing, like, you have what, 6, 7 major pairs?
Yeah, exactly.
So,
7 major pairs is all you got to worry about.
Yeah, automatically narrows your focus. 2, it's directional, up, down. It's not hard to understand. The only difficult part, I think, about Forex is just understanding the decimal point, like where how the
the actual pip itself
works, and how the minimum fluctuation in value works, and how your lot sizes work. And that's, we've done quite a few reports on that in the Forex report, just helping people get started. One of the other great things about foreign currencies, if you're not trading them, is I think the learning curve is not nearly as steep as options. Like, learning options, there's a lot of moving parts. You got to worry about your Greeks. Currency just got to worry about direction and position size, because it stops. It's the most liquid market in the world. Like, have you ever had a stop loss not fill?
No,
never. Because
the only thing I've had happen was if I put like before the announcement, the Fed announcement this past week, I had a few orders that I think were a little bit too close, and the broker was like, no, and they took it off, and they sent me a note. I was like, oh, come on.
Like stop limits and things.
Yeah, I had so many that were so close that the volatility itself could have jumped them. So they just basically pulled them off and said no.
Yeah, and you don't really get gaps. The only time you really see a gap in currencies is over the weekend.
Yeah, exactly. And
because it trades 24 hours a day. And so currencies are really, really cool. And if you, again, plugged into tackle trading, we are actually also in the process of creating a Forex 101 for you guys to keep it with some new content. Yep.
That's going to be a lot of fun to work through. I'm looking forward to that.
Well, while we're doing, shameless self plugs, if you are also a legacy member and you want to come see me teach a master trader. Now, Slawik, you're one of my original master trader students from back in the day, right?
Yes, sir.
When did you go through that class? It was 2010?
8, 9, something like that. It was in Philly. Double
Tree. So
Double Tree Hotel.
We're going to be at the Philly Double Tree Hotel. August 23rd, 4th, and 5th. So you can register up until the 9th. We'd love to have you all there. I'm hoping to have a big class and have a great time. So we'll look forward to seeing everybody there. Yep. And I'm going to see you there. Yep. Philly. Jimbo's going to be there. That's going to be fantastic. So go through, it's through Legacy. So you go through the portal and just you register, contact your student advisors, and they will actually help you get set up. So I'm excited about that. It's been a while since.
Any other shameless plugs while we're here?
Well, tackletrading.com. Go sign up if you're not a pro member. What's wrong with you?
There you go. Get the steps system for free.
Get the steps, learn how to do these trades. So there we go. We got the dollar. Let's check out currencies and go. We look at the currency. Gold. Sorry, the mother of all currencies. Gold's up. I like
Mr. Fidget Options 1 is at the October symposium.
Yep. They're always running them at the symposium. So there you go. So there you got a nice breakout on gold. Beautiful breakout. And
that's to be expected. That is just market volatility. Fear is up. People run to gold. Yep. It is the safest form of protection there has ever been, and it will probably remain that way.
Well, it's a value store. I mean, the whole point of having gold and silver is it is a value store, and it doesn't matter if you're not buying gold ingots and bars and things of that nature and coins, you should be converting some of your retirement into gold. Now, how much is questionable? I'd say probably no more than 10%. But it's a rainy day fund at the same point in time. And what you're hedging against is currency issues, like problems with hyperinflation, which, hey, if the Feds keep cutting rates and, Eurozone goes negative, inflation is going to happen at some point in time. Will it?
Yeah, the Eurozone goes negative, I'm going to be a happy camper. And those of you who learn how to trade Forex, when that does happen, you're also going to be happy campers.
And I will. Set up on silver.
Oh, I like that one too. That is a nice little high base forming with 2 wicks that came down, touched the 20, it looks like, and that thing looks like it wants to catch up. It wants to rally.
Oh yeah, if you know, silver coins are probably the best way for the average person to get into the precious metals markets. Go buy silver coins. You can pick them up from your local coin dealer.
Or another shameless plug, one of our partners that we work with is Zaner Metals. So go through tackletrading.com, click the link on Zaner's. That way they know that we sent you over there, and they can get you set up. That I order sleeves of silver coins from them that they mail it and arrives right on your doorstep. Beautiful.
They even have a little accumulation program where you can pay them a little bit per month until you got enough for the coins, and they'll send them out to you. So,
oh yeah, or regardless of what the price is, they'll just mail you just on a monthly basis, mail you whatever you want.
Yep.
I've been trying to get some platinum coins from them, but they always seem to be in low stock. And platinum and palladium coins.
That's the beautiful thing about gold and silver is there is fixed inventory. So, and while we're doing that, that makes me think you have to go check out Bitcoin, just obligatory. It's up again, a little bit doji today, but it's up at 10,650, 45.50. Oh, it's close enough, but I like that double bottom at 10,000. I have not personally been a Bitcoin crypto speculator. I've been watching it from the sidelines, and I've been a fan, but I do not currently own any Bitcoin myself. Just one of those where I watched it ripping up to, 17, 20,000. I thought to myself, yeah, that's a bubble. So here it is back down, found a bottom. And again, I think that it's not a question of if cryptos, it's a question of which crypto ends up becoming widely accepted.
I have not been able to get myself to pull the trigger on Bitcoin since 2017. And that was when I cashed out.
Cashing out was the smart thing to do when that went live there.
But all right. Anything else? Actually, you know what? Today's International Beer Day, guys. Let's look at some beer stocks.
Let's crack open one then.
Well, it's a little early in the morning for me, but
it is not even 7 in the morning yet. If I cracked open a beer now.
Well, what is your favorite beer stock? We got Bud. There's a little Anheuser-Busch for you.
A little high base pattern.
You got Sam. That's Sam Adams, Boston Beer. Not the best fundamentals, but a pretty decent little uptrend. What else do you have? Molson Coors Tap, which is down off of earnings. I've been short.
You can get a nice pairs trade between Tap and Bud.
I've been short Tap, so interesting little scenario there.
And there's Brew. Oh, they got earnings coming up.
Earnings coming out. There you go.
STZ Steve in the chat throwing one at us.
Constellation Brands. There you go. Nice. So
I think of those, I like the Bud and the Tap trade. And as I said, we could do a pairs trade on that. Long Bud, short Tap.
Long Bud, short Tap. And I won't drink either. I'll have a Sam's. So
there you go.
There you go. Not too shabby. Now, don't drink and trade. That's probably ill-advised.
So rule of thumb is if you wouldn't do it while driving, don't do it trading.
Yeah.
Well, and if you don't know which beer stock to pick, you could always just go pick the SIN index.
Oh, no. Mr. Fidget's trying to get you on the dad jokes.
Who wouldn't?
No, don't do it.
Hey,
moving on.
That would be a sin.
That would be a sin. You're a bunch of sinners.
Hey, sin stocks actually do relatively well come recession times.
It does because in a recession, people actually purchase more tobacco, nicotine.
They drink, smoke, and gamble more. So
gamble. Yes.
Well, it's like old Samuel Clemens said, if you don't have any good vices, you have no bargaining power with God, because you can't promise to quit anything, right? So there you go. So Tap. Back to the Tap. Good setup. Hey, Disney's got earnings coming up here. And this is one we were talking about in the lounge this morning. A little bit of a pullback, earnings coming up here on the 6th. Pull back into the 50-period moving average. And I really like Disney from a fundamental perspective. I think it's a really great candidate. The kind of candidate you want to own, pays a dividend. Great for things like covered calls, naked puts. Ownership of that stock's not a bad idea. Coming down into that 139 ballpark off the moving average with the doji. I'd be a little hesitant to pull the trigger right before earnings, but this could also be a volatility play where you probably have some increased implied volatility with the downward move. and earnings there in a couple days. High implied volatility, the kind of candidate that might make for a good volatility crush there, Marie. You'd have to model that out, I'm sure, but that's what I look for.
Well, why don't we set it up right now? Let's see if there's anything in there.
Well, let's see.
Is there enough juice to make it worthwhile?
Well, perhaps I've got a covered call on that in this little portfolio, but I think there is. It's a little early. I like to do it right before. But when I do these short strangles, I've seen people do them different ways. I always go longer term. I always go out, in this case, I probably try to get out past 90 days. And if I could, if I'm choosing between November and January, out past 150 days, you get some pretty big Vega. But I'm probably okay just in November. And my rules are pretty simple. Low delta. I sell deltas under 20. Usually try to ballpark 15.
Yeah, I was going to ask you about that because you mentioned you sell higher deltas than I do, but I sell, like I would sell for this since it's Friday, I would sell next Friday, but I do more like a 5 or 7 delta.
Yeah, no, I go further out. And the reason I go further out is you get better time decay than I do on your trade. I get a really wide strangle that has a high Vega, and it still has a positive theta, but it's not as big. So when I do the way I go about it is I try to keep the delta neutral. So if I'm out here selling the 20 and the delta's 11 or so, then I'm going to scroll out to the call side and try to find an equivalent. That means I'd be selling the 170 out here with the delta of 10. So 120 by 170 short strangle. So that's a 50-point strangle. I mean, that's not, chump change. That's a pretty good size short strangle. And what did I say? 170. There you go. So you only get a 209 credit on that. And it would require some significant margin. In this case, it's going to require about $1,600 in margin. And the biggest problem with the trade is you've got open-ended risk. You got risk either way. So if you got a crazy surprise by Disney, you get a big hit because the stock price runs and your short options now. There we go. Got the dollar. Yeah, man, I have to probably rescale that down to, there you go. Okay. So here's what makes this short strangle trade work for me is, hold on, let me rescale those prices.
So while he's rescaling that, the idea behind this trade is that after earnings, so while volatility is high, post earnings right now, you can get a lot of premium from this trade. So he's going to put it on right now while the prices are higher than they. The idea being that it's not going to gap outside of that range that he's built. So he's going to pick up the overpriced options. He's going to pick up the difference in that. And then if it does not gap outside that range, then he's profitable. So it's a very simple trade that you can put on just very shortly before earnings and be able to make a quick profit.
Yeah, I'm expecting the volatility to crush. This is a volatility crush play. So this is kind of my take on it. And probably the best way I've ever heard this explained was Micah Brooks. He said, the only constant in the market's time decay. So Marie's theta queen, right? You focus on time decay because it's the one thing is going to happen. And he said the second most predictable thing is volatility cycle. It increases at earnings and it drops afterwards. Outside of that, you're picking direction. And that's, you can trade trends. You can be a good technical analyst. You can be a good swing trader. So if you're a hyper, directional and you want to control your risk best, then you do what Slavic's doing. You get down to day trade. I swing trade. I'm a recovered day trader for the most part. I earned my token. But I only did that, because I had health issues and I wanted to, get away from my computer a little bit. So I didn't want to sit in front of my computer all the time. And so swing trading and position trading work. Now, every quarter, you've got an opportunity to make money on a volatility rise and a volatility drop right afterwards. So this would be trying to take advantage of the overpriced options. You'll see right here, this little volatility rank indicator is telling us that, hey, we're at 59% of the last year's high and low, and 92% of the days over the last year were lower. So the odds of the implied volatility staying high long-term are pretty low. And so we expect a volatility crush. Now, I don't know how much the stock's going to move on earnings. And I've given it a $50 range, between 120 and 170. So if I set my little price slices here to break even, and then I'll put my middle price slice back in, I'll go set those on the chart. Basically, I'm betting that it stays in the middle between those top red line, bottom red line. I think I got.
So to
pretty good
answer
on
Mr. Fitch's question, yes, you're betting as to where it's not going to go. And if
I'm betting where it's not going to go. I'm betting that the house is right, that the options are overpriced because that they're expecting a move, and the option premiums have been inflated to compensate for the move. We don't have a market maker move yet, but over the next couple of days, early next week, you're going to see the market maker move, a little MMM thing show up there, and it'll tell you we think this is going to go up or down, X number of dollars.
You can look at. Oops, sorry. You can look at the next week's expiration on the right-hand side. It shows you plus minus $6.22.
Yep.
But that will, as we go towards earnings, that will fluctuate. And another way to short those strangles is I used to do that where you have the expected move, and to be safe, you pick up $12 or whatever. If it's at $6 still the day before, the day of the announcement, I would imagine it's after the bell. Mm-hmm. If it's $6, you go $12 out, and
so you double the market's estimate. You say the market only thinks you're moving $6. Mm-hmm. I'll pay you out if it goes past 12. So you're playing the house. You are the house.
That's
yeah,
right.
And that's exactly what I'm doing. Is I'm looking at the expected move, doubling that, giving myself plenty of cushion, because I've come to the conclusion, having delta traded and theta traded, I like being right. I can sleep at night knowing that I am 80-90% chance that I'm going to be right. It's not going to go there. So,
well, let me point something out to you here.
Right, or both.
Yeah. Well, here's why I went with my method.
Probability.
That probability says 99.22. Yeah. So I like being right, a lot more, and I like sleeping a lot more. And really, what I'm banking on here is the fact that when I do this, the delta is neutral, the theta is positive. It's not as pretty as your theta because you're doing shorter term, but I get the big negative Vega number. So when the implied volatility drops, that means for every 1% drop in implied volatility, you'll end up making that much money. So, again, do I expect 5% drop, 10% drop, 2% drop? I don't know, but I know that over history, the implied volatility has dropped. The time decay is going to work. And, worst case scenario, if the stock price is running up, I buy Disney stock. If the stock price is running down, I can short sell Disney to offset some of that risk. But these types of trades, just on the volatility crush overnight, I'm typically looking for about 5% overnight.
Yeah.
Mm-hmm. Very short term. And then, yep.
Go ahead. Steve, yes, you can do an iron condor if you don't have the buying power. And I'll do that on the higher stocks that I want to strangle that I can't afford to. I'll end up doing an iron condor.
Buy cheap
It just takes more premium to do it as a strangle and not a condor. Condor takes it out, makes it cheaper. So you absolutely could do that.
Yeah, in fact, that's actually what I would suggest if you're dealing with a smaller account size, limited, do wide condors. And you might even consider, I'm not sure if the margin requirement will stick the same, but you can probably even do diagonals where you sell longer term wings and you buy shorter term. You sell longer term, shorts, and then you buy longer term wings to offset. Or I said that backwards. Sell longer term, buy shorter term. I'll get there eventually from here.
You're just gonna confuse everyone, but
done. Effective, immediately.
The idea behind it is that you're not even planning to stay in this trade the entire time, would you?
No, I'm going to stay in that trade for 2 weeks tops.
So 2 weeks in, and so the max profit, he's not going to stay in that long because as soon as that volatility crushes, he's just going to pick up that $28 that he made. Yeah,
basically, so I'm hoping to sell that for 2 and buy it back for $1.50 next week.
Exactly. It's not meant to be a greedy, home run grand slam trade, but these type of base hits constantly over and over. Where how many companies are reporting earnings right now? Well, all of them. How many companies are there? Thousands. If you did a trade like this and picked up $20 over this earnings season on 10 different companies, 20 different companies, then that starts to add up, and then you can realize where the actual beauty is. And the fact that you're picking up these little base hits, but you do these enough times with the probability being 99.2%, then you'll start to fall in love with earnings season.
Yep. Well, and Adam mentioned he's been caught on a short strangle, and I've been caught on many short strangles. That's why I go with.
But how many have you done before? If you get caught on one, but you've done 1,000 that work.
Yeah. Well, it also comes down to position size. So what I suggest is do lots of them with small position sizes, and then try to stick with stocks that you can afford to hedge with, because the delta on this is pretty low. And even if it starts running like crazy, imagine if it gapped and surprised and like broke resistance here at 147, and it broke, support down here at, 130, what would you call that? 37. Your delta is not going to be that high. So, if I slide that into like 148 and up to 135 or so, your delta would be, if it's running up, -13, if it's run down, +15. And so if you can afford to buy 15 shares of stock when it's running up, it offsets your risk. It gives you a little bit, you have to be able to buy a couple shares of the stock. And so, if you were doing 10 contracts on that, well, that really increases the amount of money you'd have to hedge. But if you're doing a game of probabilities, and my assumption is that the market maker move, the pricing on the options is correct. It's the surprise that'll catch on those. And so how often do you see big earnings surprises? You see them. It happens. But it's just like the iron condor. As long as you don't let them go all the way bad and you shut them down early or you hedge them, you'll make money over time on the consistency and the probabilities.
Absolutely.
Yeah,
and
for smaller accounts, do the iron condors for sure.
And with that, guys, I'm going to transition us into our last segment, which is the rapid fire segment. So rapid fire is where you guys throw out a couple stocks. We have about 7-8 minutes that we will run through them as quickly as we can. We will shuffle through, give you our 5-second opinion. I think we have everyone here that can actually do a 5-second rapid fire, and we don't end up with a teaching moment. So let's go ahead and start off with CB. And I'm going to kick this over. Ladies first. Marie, you got CB.
CB, okay, upward trend. Looks like it's retracing. I would watch it to retrace. I mean, not to retrace. Confirm.
All right, I like it. Next is Snap. Slavic, you go ahead and take this one.
Snap.
Holy snap. Nice. Potential buy signal over yesterday's top. Tapping tail. Stop below that base low or that big green candle. 127 extension targets, so 19. I would look for 19 out of that.
Very nice. I bet good money that's going to be on the scouting report this afternoon. Netflix. I will take Netflix. Netflix, we've had a lot of craziness since it gapped down before. It did work as a bearish play. I believe it was on one of our reports as a bearish play. I'm going to look for a second entry point below that pivot low. Is going to be the next time I'm going to enter as a breakdown play. Moving on to PG. Noah, that's you.
PG. Pretty pullback after a pop. That's a lot of P's.
There's going to be a lot of pretty pullbacks with
pullbacks after a pop. Please wait for confirmation. No, this is a great setup. I like the pop on earnings, the pullback into the rising moving averages and support zone. It's got shrinking candles right now. And this, just like the others, it needs some confirmation. But this also could be a candidate that you see on the reports this week.
Very nice. And ICE, back to Marie. Or no, Cron, excuse me.
Cron. Oh, Cron.
Cron, one of my favorites that I love to hate. I actually have a poor boy on this that's underwater, but I've been cash flowing, so I don't care. Yeah.
I just remember you can roll that call down into a horizontal, or if you get desperate, you can roll into the money call, which we learned this morning in the lounge, right?
Absolutely. No, I have. I've been making money on it. I'm not complaining. My long call, it just, when you're looking at it and you're rolling and you have that strategy and you can look at your profit loss and go, okay, I made money. But in your short term, in your monitor tab, it shows your long-term trade that's way underwater. And so it can be kind of depressing when you look at that. But
some of those, you got to keep a mental tally, or even on paper that, hey, I've had 4 calls expire that I'm up $400 on the monitor tab. It says I'm down 300.
Yeah, right. It's a mental game. And I know I do for my journal. I keep track all in one line, so I know where my break even is, and I'm adding it. I don't just change my number. For those of you who are good at your journaling, just add your cents in there so you can see that, hey, I've added cents to this 10 times or 6 times or whatever it is, and you can see your break even and know that you're not underwater what your monitor tab is showing you.
You bet.
All right, next is ICE.
Ice, baby.
Slavic.
ICE baby, break of the trend line to the upside here after this pullback. Aggressive entry long happened today, in my opinion. Stop below yesterday's candle. I would target 100.
Beautiful. Noah, you are
Next.
up with I lost my place. GS.
Goldman Sachs. I want to short them on principle alone. Deep pullback. I kind of expected the banking stocks to get hit with the rate cut.
That makes a lot of fundamental sense.
Yeah. So, pull back down. It's going to hit that rising 50-period moving average and probably stabilize. You might be a little late to the game for the shorts because it is falling into that rising moving average. But I don't know that I really would run out and buy them off of this dip because there's the rate cut hurts banks. They need those rates higher to keep their balance sheets favorable.
All right, next is Micron, and I will take Micron. It had a little deeper retracement than we would have liked. It actually broke down below its support level at $44, and it's kind of had a range between 44 and 45. It's now below all of that. I want to see this thing back above 45 before I could really say that. Play this as a bullish.
If this one was brought to the table for our scouting report meeting, it would get vetoed just because
it would get vetoed.
That 20. There you go.
All right, CSX. Jonathan, didn't you ask about this one yesterday? Are you stuck in a bad trade and you're hoping that we're going to say it's going to reverse?
No, may or may not be true. That's broken some support.
Yeah, it's breaking some major support. If you are in this one, Jonathan, I would say take the loss and don't take any more of a loss. If you're shorting it right now, continue shorting it. It did break down.
Lock profits if you have any, because this is it's writing that channel support. If you look at the bottom of this little.
No, made a good trade. If you made a good trade, then take some profits.
Well, here's the one thing. Okay, from a weekly perspective, I see where the buyers might want to come in, but again, from the daily perspective, it's still got some downward momentum. It's slowing down a bit, and you got a potential for revision to mean, but don't bank on it. Just remember, your first loss is your best loss, rather than hoping and praying. Hoping and praying. If you wind up in your backyard doing naked rain dances, building an altar to appease the market god, you probably went wrong somewhere.
I did that once or twice.
Just once or twice. I've got a routine.
Doesn't help.
So
now I just justify it. I'm like, okay. All right. We kind of stole that one from Marie. So we'll give Marie rig.
Which is funny because my husband's the one who requested rig. It's downward, but it's coming up on a floor. So I'm not really sure. Don't want to catch a falling knife on that one, but at the same time, if you want to own rig, this is a good time.
All righty. Jimbo. Oh, wait, nope. Don't skip. SYMC. Oh, actually, James has the VIX on there first.
Well, since we're justice free, the VIX is going up.
Market down, VIX up.
Yeah. So I don't know what to do with the VIX because that's going to be a question of market reversal.
Take profits.
Buy at 12.
Yeah, so
take
that was
profits.
something I was talking about, and we actually mentioned it before it had this huge spike. Tim and I brought it up 3 days ago on the halftime report. So something I have a standing order, and this is just something I learned, and it's volatility play, and you got to understand it. But if it hits 12, I'm buying calls. Just something I've been doing, and sometimes it works, sometimes they die, sometimes they go nowhere, sometimes they pop. So a lot of fear was in the market with the VIX, and that's why it's up.
There you go.
SYMC. Who's up on this one? Slavic, I believe you're up.
Yeah, I think I'm up. Earnings, right? Be careful.
Earnings is in the way.
Earnings, be careful.
I
Range
wouldn't
bound.
touch it.
Could be a volatility play, but it's got a wild personality.
That's also a very messy chart. I want to try to trade this thing directly anyways.
Yeah. Next.
HPQ.
HPQ.
Noah, that's you.
Down.
Beautiful.
Just good downward momentum today. You could momentum trade this below the daily low, trail stops, to the downside. Earnings is coming out. Obviously taking a hit. And I don't know if it's just the market response itself, if there's other negative news, but they've got a nice little uptick in selling volume and pressure. And, it looks like it's past that first level of support resistance zone. There's a couple of other levels down there, probably around 19, maybe 1890 or so. So momentum trade, trail stops.
All right, Jimbo, you're being a little greedy. You're only going to get one of those. You're going to get HPE. Whew. That's a pretty big break right there. Didn't just break down below the
what do we
14.
just, we had HP Incorporation. That's Heimerlich Payne, right? So HPQ,
HPQ, now HPE.
HPE, Hewlett Packard.
Copy paste everything Noah just said from the last stock.
Yeah, exactly. Momentum trade down, trail stops, good downward momentum, uptick in volume, clearly coming off of some, don't know if there's additional negative news, but that's some good downward momentum.
All right, we're running out of time, so let's go through these really quickly. CC.
Hammer time. Fill the gap.
Gap down, look for the gap fill.
Gap down, contrarian trade, don't do it. Next.
All right, Noah, you're going to keep hammering through these. Intel.
INTC. Needs confirmation. It's down below the 200. I think all the semiconductors got hit a little bit harder. I'd wait for confirmation back up. Could be a time to sell naked puts if you like it.
All right, and we're going to end with CSCO.
Cisco. Down. Violated trend. Momentum trade. Supporting the moving average. The 200 are going to kind of line up in the same area. You can momentum trade that down, but you got earnings coming up. So day trades probably, but not long-term trades because they got earnings coming up on the 14th, which is my birthday. Everybody celebrate. See you there.
All right. Well, with that, guys, we are going to be out. Any announcements we have going on? Well, we're going to have our scatter report meeting later on this afternoon, which means reports will be coming out this weekend as usual for our Tackle Trading Pro members that get to use those. We always set up great trades. Always have teaching moments in the write-ups. So we're always teaching from the scouting reports as well as giving you the picks the coaches go through and pick. So if you're ever curious how we make our trades and what stocks we're looking at, those are on those reports every single week. Anybody who's traded those, they know that they are great picks. When they trigger, they typically go to where we're targeting. So if you're not a pro member, make sure you get over to Tackle Trading, sign up, get those reports this weekend. Other than that, do you guys have any shameless plugs?
Well, everyone's wishing Noah's birthday. Is it today, Noah, or it's
No. It's not till the 14th. That's when earnings
okay.
at Cisco is. So me and Cisco are going to be hanging out on my birthday.
Gotcha.
So there you go. It's coming up soon. I get into August and I start thinking it's my birthday month. You start having like the birthday palooza celebration. So,
What are you going to be, 27, Noah?
Again this year. It's amazing how that works. Woo. Yeah, I'm at the age where you start having to drop the F word in between the numbers. Like I'm 45. There you go.
All right, guys, we're out.